Opportunity cost is what that money could have earned over their lifetime. Think about that. The hundreds of thousands to millions of dollars that will flow through your bank account over your lifetime that you never receive a penny from. It was just literally flowing through. This podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Please consult a professional advisor before making decisions based on what you hear on this show.
Welcome back to the Wealth Without Wall Street podcast. Today, we're breaking down and pulling back the curtain on our passive income report from March 2025. And Sally, we're going to go deep into one specific asset that's on this list. And I think it's probably obvious to the person looking at this right now that out of the 52,000 that we brought in the month of March, 23,000 of that came from one thing.
Yes.
What's that one thing on the list for those who are driving down the road or running on the treadmill?
Well, you start paying attention when the numbers are like that, right? It's the land business. And when we say the land business, we're talking about flipping raw land. That means the unimproved, the boring stuff, not the ones that have houses on it. We're talking about literally raw land, sometimes in the middle of nowhere. But it is so boring, it creates a lot of passive income.
Well, and I actually misspoke. We have $23,000 of note income from the land business. We have another $11,900 that came from the land business just in cash sales.
That's right. This is kind of a unique month for that.
Yeah. So out of the 52,000, roughly 35,000 of that came from this very asset. So that's the reason why we're going to talk about why we chose land. Would love to talk, if this is the first time listening to us, why we went deep in this, what it is, but also how we're funding it and what it looks like inside of our system.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
We talk about on the show all the time that your need for capital is huge, right? The number one obstacle to becoming financially free, Stallions, what?
At lack of access to cash.
Right. So we were acquiring cash, but then needed to figure out where to put it. And so land was one of those things for multiple reasons, because especially in times of, trouble, like where I think a lot of people feel like we are today, land is kind of a place where people flee to, right? Because it's safe. It's always going to be there. And for our purposes,
right?
Yeah.
It's a real asset. Yeah.
And for our purpose, it gives us a place to create cash flow just because the unique nature of how that's done. So for the person who's never dug into buying raw land and turn around and sell it, give a 2-minute overview for someone, Joey, of what we're doing.
Yeah. Well, first of all, think about it like this. We're offering to someone who's been a landowner a 20 to 30% of the retail value in a cash payment to buy their land outright. Okay, you say, well, that sounds good, but who would be willing to sell you land for 20 to 30% of what it's actually worth? Well, the people who are behind on taxes, the people who are outside of that state, like they own land in Utah, but they live in New Mexico, and the people that are just, they inherited it, but they didn't really ever want it for whatever reason, or they bought it with one intention and now that has changed gears, life has changed, and they don't want the land anymore. It's just similar to like if I walked up to you right now in your garage and you had 2 weed eaters hanging on the side of your house, and I said, hey, I'll give you $10 for that weed eater. And you're like, oh, that thing, I haven't used it in a year. I was going to throw it out. Yeah, sure. It's probably worth $100, but I'll give it to you for 10. Yeah, that's great. That's exactly the mindset of the person that we're approaching to buy their land. Now, it doesn't stop there. We buy it for that. We turn around, we sell it on the retail market to people on Facebook Marketplace, land.com, different websites that are about land ownership. But what the key thing is that we're able to sell it for a higher retail value because we make it affordable for people to buy. Okay. So for example, I may buy a piece of property for $2,500 and turn around and sell it for $10,000 because now I can say, I'm going to sell it to you for $1,000 down and $250 a month for 40 months. That is the model that makes it, oh, this is kind of like buying a car to somebody. So somebody that wants land, but they don't have $10,000 sitting around, they would much more likely buy from somebody like me who makes it easy for them to purchase. That's where we get these ridiculous returns. And that's how we make this a sustainable passive income, because it's not just a one-time sale, although we had one of those this month. It's a ongoing perpetual note that comes in every single month until it's paid off. That's what we love about this.
If you stick around to the end, especially if you're watching on YouTube, we're going to show you exactly what those numbers are, what we've done to be able to accumulate this amount of cash flow on an ongoing basis. And also, what is the so what to that? What is the net return to what we're doing and how it measures up against other things? Because that's really what most of us are trying to do. We're trying to find the thing that fits our investor DNA and our filter buy box. And we want to know, does it meet my goals? Is it meeting my expectations? So just to recap what Joey said, we're buying undervalued parcels, sometimes in bulk. We resell them for cash, mostly on seller financing, and we repeat. And we've done this hundreds and hundreds and hundreds of times over the last 4 to 5 years. And it's become a very profitable business for us. And I want to, more importantly, show you not only just what that does, but what is the process to getting there? Because we get asked that all the time. What are you guys doing with your passive income, right? Like, are you guys living off that passive income? Is it truly creating financial freedom in the sense where you're not actively working? And I'm going to let the cat out of the bag, Stallion. No, we actually don't use that money. And it's because we are getting paid in our active businesses, and that exceeds our monthly expenses. And right now we love doing it. We just keep doing it. So in this situation, we're just taking this cash flow and using it to go buy more undervalued parcels, resell them for cash or seller finance, and repeat. I mean, it's just
exactly
over and over and over again.
And I just want to point this out before we move on. This model is from the landgeek.com. Our guys, Mark Podolsky and his team, they're the ones that taught us this. They're the ones that actually operate our business for us. And so that's why it's passive for us. Now, many of the people in our community have worked with the landgeek.com, and they've set up an active business with the Landgeek, which is also an option. But today we're going to break down how it's passive to us and how you can kind of do the same. So I just want to give credit where credit is due. The landgeek.com is where all of this became possible for us.
No, for sure. Well, I want to get into how did we get the cash, right? So I'm just remembering the person who's listening for the very first time, who's never, participated in any of our events. They don't understand why, or maybe even that we do use dividend paying whole life insurance. And the reason why we do is because it gives us a liquid place to store cash that's protected from creditors, and we get some tax benefits as a result. Most people out there use checking accounts, right, for their cash instead of this. I was talking to a guy earlier. He said, man, my goal is to have $5 million in cash. And I was like, oh, cool. Where are you storing cash today? And he's like, oh, I'm storing it in my checking account. I'm storing it in a money market account inside of this thing. And then I'm also buying the bad word, stocks and mutual funds and things like that. And I was like, okay, have you ever heard of the infinite banking concept before? And they're like, no, what's that? And so I said, it's the use of how we store money to finance the things that we purchase. We use dividend paying whole life policies owned by mutual companies, meaning that us as the policyholders are the owners, not stocks. And we are able to turn that cash over. He's like, well, how does that work? I was like, well, let me give you an example. If I'm buying land, right, I'm going to go to the insurance company and get cash from them against the cash value that I have. And
That's collateral. Your cash value is the collateral. Yeah.
right. And what do? They literally use my cash value as the collateral. They put a lien on it. And people are like, but why would you do that? It's because I'm going to create this uninterrupted compounding interest. So oftentimes people are putting money in a cash account, spending it, and the money's gone forever, right, Stallion?
That's right.
And that amount of money, I've heard you say this, is the largest expense that they'll never get a bill for. Why is that?
Well, because opportunity cost is what that money could have earned over their lifetime. I'm not talking about in 1 year. I'm talking about over the course of your lifetime. Think about that. The hundreds of thousands to millions of dollars that will flow through your bank account over your lifetime that you never receive a penny from. It was just literally flowing through. Compare that with a system that you capture any amount of money in a liquid form, a savings kind of component that then continues to compound over your lifetime and then into the next generation through a death benefit, like more than you'd ever put into it. This is the system that Nelson Nash taught us through his book, Become Your Own Banker. He was our mentor for over a decade. And he said you have to think long range. But the bigger thing is, man, he taught us that there is a cost to our capital. And when you actually understand that, you start to see amazing opportunities with that money and what it could earn.
Well, let's connect that to the land, because that's the key, is that what are we doing with our dollars? We're trying to buy assets to produce passive income. So just like we were showing a second ago, our passive income report had almost $35,000 this past month that came specifically from land. Well, where did the money come from? We borrowed the money from an insurance company. How did we get the money in the insurance company to start off with, Joey?
We had to pay premiums.
Oh, man, that sounds like an expense.
Yeah, premium sounds expensive, doesn't it?
Yeah. I put in regular in my car.
Exactly. Unleaded. Regular unleaded. But the premiums are just simply the means by which we could liken them to a deposit, right? And over a period of time, those deposits add up, and then we have access to that capital to then borrow against, as you mentioned, through the collateral, through the loan process of the insurance company.
There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Hey, Wealth Without Wall Street family. If you're serious about building passive income through real estate, then you need to check out Dustin Heiner's podcast, Master Passive Income.
Yeah, Dustin retired himself at 37 years old using rental properties. And now he's teaching you how to do the very same thing step by step. If you're looking for real estate strategies that actually work, this is the podcast for you.
So go subscribe to Master Passive Income wherever you listen to podcasts and start building your path to financial freedom today. Go check it out now.
The cash is going to accumulate somewhere.
Yes.
Like, this is the part that we all have to understand. Our cash will accumulate somewhere. It will either be in accounts that we own and control or someone else's accounts that they own and control, right? If we're just consumers, we spend everything that we make, our cash will accumulate in the accounts of the people we're spending money with. If we give our money to the markets, the cash will accumulate in their accounts that they control.
That's right.
When we use dividend paying whole life insurance, we're accumulating cash inside an insurance company. And the reason why we deal with mutually owned life insurance company is because we own them. So then we're accumulating cash in things that we own and we can control. Let me show you, if you're watching on YouTube, how we control it. I call up the insurance company. Actually, I never call anybody. I just fill out a form. But let's just pretend like I was the guy that wanted to call up because I just wanted to call somebody.
You're that guy. Okay.
And I let them know that I want to take out $50,000 to go buy some land. Now, I don't have to tell them that I need to buy land. I don't have to give them my credit report. I don't have to. I wish everyone, I could like show you right now what life is like whenever you have to deal with banks. If you could see my phone right now, you would see all of these red missed calls. You know what those red missed calls are? Refinancing a mortgage, and I'm getting the credit the credit report agency has sold my information to all of these companies that are now trying to call me to be like, oh, you're refinancing your mortgage. You should do it with me. There's no less than 100 in 2 days. Well, when I called the insurance company to borrow money, they didn't ask me for my credit report. They didn't ask me how much money I had to pay them back. They didn't ask me if I had a job. They didn't want to know what my K-1s were for all the 400 entities that we have. They didn't want to see my tax return. Joey, they wanted to know 2 things. What was it?
How much and where do you want me to send it?
Right. And I said, here's how much I want, and I want to buy land with it. So that's what I did. Buy land. So we buy the land, and now we use that money to go buy land. Now, in my little illustration here, it looks like a house, but in order for there to be a house, it has to sit on what?
Land.
It would have been a blank spot if we did put a house there. So if you give me grief about that, that's the point. But there's a key thing. When we borrow money from the insurance company, how is it structured, Stallion?
It's not structured at all. In fact, there is no required payment on that loan. It is only accumulating interest on an annual basis.
So it is a interest-only loan with no required monthly payment. It is also reducing my death benefit by the amount of the loan.
Which, by the way, is the reason why this all works. Because most people are like, oh, is this some sort of loophole that you guys figured out? Like it's going to potentially go away at some point? No, the insurance company is happy to provide this loan function to you as a policyholder because their liability to you is the death benefit. So whenever you borrow against it and it reduces the death benefit, that's just less money on their books as a potential liability that they have to pay out if something were to happen to you. That's why this all works. And so it's not something, magical. It just is the way that they function.
Well, we were talking to someone the other day that was saying, hey, I was sharing this idea with my friend, and he got really hung up on the idea of borrowing money because he's just so anti-borrow money. And it's because we have these terms. We made fun of it earlier, saying premiums, because that's where the insurance companies, label the dollars that you send them. And we think premium, we think, oh, that costs more money, right? I put regular gasoline in my car, not premium gasoline. That costs more money. Oh, if I'm going to go and sit in the seats that, Joey does when I go to the Masters, I'm going to pay a premium, right? Like I don't want to do that. I'm just a regular old Joe here. Well, the same thing's true with the loan. When people think the word loan, they think of credit report, they think of tons of calls, they think of having to show all of these income statements and K-1s and tax returns, and then monthly payments that start within 30 to 45 days of when they took the loan out, regardless if they got the money to pay it back.
That's right.
But when you go to an insurance company and you take a air quotes loan, you're getting a prepayment of your death benefit. That sounds pretty good because when we die, none of us are going to receive $1, right? Our beneficiaries will receive money if we have a life insurance policy. But when we are using it during our life, we're actually accessing the death benefit. Okay. And if I don't pay it back, Stallion, is somebody going to come and take my land from me that I bought?
Not a chance.
Or are they going to come and take my car if that's what I bought?
No.
Are they going to take my bass boat?
No.
My single family home? My mobile home?
No.
My e-commerce website?
No.
No. None of that. So that when you think loan, you attach it to all of those other issues. I don't want to be a slave to the lender. That's what people get hung up on. And we say, okay, it's a little bit different. I know the word sounds the same, but it's not the same. So we get an interest-only loan. I know I'm probably beating this up. If you've been, practicing IBC, you're like, get on with it, Russ. But if you're listening to this for the first time, like this is important information. These are the misconceptions that hold people back. So we take a loan, which is a prepayment of the death benefit. We take that cash and we go buy land. The land starts kicking out cash flow, and either we can do A, repay the insurance company, which reduces the lien against our insurance policy, gives us more access to cash, and we can go buy more land, right? If we want to do that. Or we can skip sending it back to the insurance company because we're not required to pay it back, and we can go buy more land. We could just keep recycling. So I said earlier that if you stick around, we'd show you some actual numbers. So Joey, this is a statement. It's a couple months old. Forgive me for not going and like screenshotting the most recent, but we were doing a talk in front of a couple hundred land investors back at the beginning of February. So what's the numbers here? Out of on this statement, how much cash flow had we created, and what was our enterprise value?
Yeah, cash flow on a monthly basis was $33,516.08, and the enterprise value was almost 2.2 million, 2.188.
All right. How much money did we put in order to get there?
Well, I'm glad you had it right behind it because I wasn't going to remember exactly. $450,000. That's
and we started
the last 5 years.
Yeah, we started this going back June of 2025, right? Now, did we have to pay when we borrowed the money from the insurance company? What were we really on the hook for?
We were only on the hook for the cost of that money, which is the interest expense to the insurance company.
So there was a carrying cost to borrowing the money. They don't do it for free.
Exactly. That amount was $67,500 as of this year.
So when you look at the math and you say, okay, we put in $450,000 to buy the land that's now worth $2.1 million over roughly 4.5 years, almost 5 years now. That's a 42% annualized rate of return.
Is that good?
Well, no, it's not bad. I mean, but what we just said, and I think I want to make sure we reiterate it, we didn't use our cash. What did we do?
Right. We borrowed the insurance company's cash.
So we were only on the hook for that $65,000, right?
Yeah, 67.5. Yeah.
So when we go and we put that into the financial calculator, we say, okay, well, the first year we had to pay $10,000 of carrying costs, second year 15, second year 20, last year 22,500. Now we have $2,188,000 value. What's our return, Stag?
Yeah, over 237%, almost 238%.
Oh my goodness.
That's a game changer.
Is that good?
That's great.
No, that's great. That's what our buddy Mark Podolsky would say. No, that's great. And here's the key is like, we wanted to take time as we, focus on all the different things that we're investing in, and a couple items. Misconception number one that people get whenever they go to invest in things is that they think, oh, just because Russ and Joey is doing it, that means I should do that very thing. I'll have the same result. Answer is false.
Right.
Because our resources, our network, the way we were able to create this will be different than yours. You probably could do better than we can, but you also may not be able to pull this off. So you need to understand what your investor DNA is. This also fit really well in our investor buy bonds because it created cash flow, but because we didn't need the cash flow, we could just keep turning it. And I think this specific strategy that we're employing is really good when you don't need the cash flow immediately. When we want to turn on that spigot and start letting it come home and be able to use it to spend to do things, great. But it's nice that we can give it a little run rate, right? We don't have to start spending it right away. So if your situation demands that I need the money immediately, this would be why you have to understand what your investor DNA is, what your investor buy box is. Just because it looks good on paper here doesn't mean it works for you, because you could have different goals and objectives.
That's right. And I think the key thing there, Russ, that you mentioned is if we're saying things like your investor buy box, your investor DNA, all these terms sound foreign to you. That's because you haven't been a part of our passive income lab, right? This is where you take your passive income operating system, this IBC, this infinite banking that we've just been talking about, and you're like, what do I do next? That's what the Passive Income Lab is for. If you haven't already enrolled in that, it's a 12-week course where you literally guaranteed to get $500 in passive income. Maybe your first $500 in passive income by the end of the 12 weeks, or we will work with you until you do. And you have to apply, but if you can qualify for it, then you can take advantage of this offer. Go to wealth.wallstreet.com/free call and talk to our team about if this would be right for you. Now, we just want to make sure people are getting to financial freedom. And sometimes you just need to put in the reps and build these systems.
Yeah, well, it's important to have models that help give you a framework of what to do. We share this report every single month with you for the one purpose to say, and if two rednecks from Alabama can build over $50,000 a month of passive income, you can too, right? You can do a lot better than that. What you track grows, right? Like there's things in your life that you're focused on. Some of you are focused on time management and you're tracking it and you're seeing it improve. At the worst case, every single Sunday, I think it's Sundays, you get the report from Apple and it tells you how much time did you spend on your dumb phone that week, right? Apple's tracking your time. Almost every app we have is tracking our time. But are they tracking it for their purposes or your purposes, right? Like, so how are you tracking your time? How are you focused on getting more of what you want? For us, we're also tracking passive income. We have a spreadsheet. We share it with you for accountability because what you track and report on grows exponentially. So whatever the thing is that you want to grow and you want it to grow faster, right? You share it with somebody. There's a saying that if you want to go fast, you go alone. But if you want to go far, you go with someone else. And for us, we want to go far. Like our objective is to think 100 years into the future. So this passive income report is not a vanity thing for us. This is an opportunity for us to work toward the things that we want for our children and our children's children. And as a result of that, us being selfish in nature to want this for our families, we are sharing it with you. And I hope, man, as a result, some of you are using this and are taking action as a result. And we hear that. I mean, we've had thousands of people that have come through our communities and they've told us, hey, by the way, I've started my first passive income as a result of going through the passive income lab. Oh, by the way, I was able to walk away from a job that I didn't like because I heard one of these strategies on your podcast. I went, set up my passive income operating system. Now I'm implementing that. So I'm working in that job, but it's creating streams of income for me. Then now I've walked away from the job that was taking me. I was constantly having to travel and I wasn't able to be home. Wasn't able to drive my kids to school or pick them up. I wasn't able to do the things that I wanted to. Well, great. Like these are just amazing opportunities. So when you look at this report, I'm hoping it's inspiring you what's possible. Don't just go do this one thing. Do what Joey said. Jump on a call with somebody so you can find out what is your investor DNA? What is your investor buy box? Hey, what is this stupid thing called the passive income operating system? How do I apply it in my life? Does it fit? What do I need to work on first?
That's right. And so with all that, I want to just end us with this. We appreciate you. We hope that this gets you to the next level in your journey to financial freedom. And if you got value, please reach out to a friend, share this, like it, subscribe to the podcast, and allow us to continue to move you along your path to financial freedom. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.